Good day. Jeffrey Friedman, Senior Market Strategist, RJO Futures, January 9th, with my stock index comments in the futures market. Now, I always give you the word of the day. I'm going to have to say the word of the day is employment. But I could say bull market, or I could say the best man standing. But I'm going to go with unemployment because it kind of reflects those three concepts. Best man standing, United States versus Europe versus China. Europe's weak, China's weak. They're stimulating, we're not. We haven't raised interest rates, that's another key question, but we are not doing bond buying programs anymore. So we're stopping printing money. Europe, they want to print a lot of money. China, they want to print a lot of money. They want to stimulate their economy. So we're the best economy on the planet for right now. And our stock market index futures indicate that. Now, in the very beginning of the year, we had a pullback of over 100 points in the S&P. Looking at the first 2 or 3 days. And you know the riddle, the first day goes the first week, and the first week of the year goes the first month, and so on for the whole year. Now, we're not there yet. Okay, we had a small correction and we zoomed right back. We had a V formation. Looking at some of the highlights, and I said the word of the day is unemployment. The word of the day for unemployment is we beat the street. We basically created about 240 jobs. We had a little pullback in the private sector, but in general, the estimates were better than, the actual was better than the estimates. So now, what was the worry? There wasn't any worry when it comes to the unemployment rate because that went down, and it went down and beat the street estimate. Now, the big worry was wages. Wages seemed to kind of shrink a little bit on an hourly basis, and that could be a concern. What we want, if we're thinking about world deflation or not enough inflation, is we want wages to kind of creep up, and that we're going to need more people working and make the working world a tighter place so employers can't whip their employees. Now, have said all that, okay, let's take a look at some of the technicals. The technicals are going to be that we are basically the March S&P future contract, my favorite market, is at around 2050, okay? We're not doing too much, but we just came off of probably a 50-point rally in the last 2 days alone, and that offsets the slow start in January. Now, where are my kind of numbers of resistance? 2084, 2092, that would be the all-time high. Going down a little support would be 2035, but the real number that you want to take your pencil and circle around is going to be 2010. That's my new number, okay? 2010 would change and have the bears, in my opinion, on the charts, take control of this market. Until you can see a close under that, we are still sideways to bull. And if we go over 84, we're going to be in a bull. And if we go over 92, we're definitely new highs. Good luck and good trading.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.